by Houston International Insurance Group and produced by Crane Rating Hotline. My name is Katie Parrish, Editorial Director for MCM Group, publisher of Crane Rating Hotline, and your host for today's conference. Risk management affects all areas of your business and requires planning ahead to ensure your business is covered from every angle. With this series, Crane Rating Hotline and HIIG have developed a range of topics that will help you prepare for foreseen risks, estimate their impact, and define responses to these issues. Additionally, this webinar series will help you establish a plan and a risk strategy that includes avoiding, controlling and mitigating, accepting, and transferring risk. Today's topic will discuss workers' compensation and key elements that impact cost containment. Contractors have a moral imperative to maintain a safe work environment for employees. On top of that, the financial impact of an accident can negatively affect a contractor's profits with increased workers' compensation costs for up to 4 years. In this presentation, Kevin Cunningham, President of HIIG Construction, will discuss workers' compensation requirements in various states, establishing an incident and injury-free culture, avoiding litigation, and making safety a priority on the job. Additionally, he will look at the aging workforce, combating rising prescription drug costs, reducing injuries that involve lost work time, and return-to-work programs. Following the presentation, my team will be sending out a state-by-state guide for employer choice of treating physician clinics as part of the medical management element, and a how-to tool for establishing return-to-work protocols that you can add your logo to. So please look for that information in your email. Today's presenter, Kevin Cunningham, has 30 years of experience in heavy industrial insurance and risk management, formerly working as a Lloyd's of London cover holder and underwriter and Crane Insurance Program Manager on behalf of Lexington Insurance Company, Travelers Insurance Company, and National Interstate Insurance Company. Currently, he is President of HIIG Construction, a division of Houston International Insurance Group, where he is responsible for all business development and overall risk management services for crane, pile driving, foundation, and related heavy civil construction segments. Additionally, Cooper Wallach, Senior Vice President of the HIIG Specialty Division, will be on the call today. As HIIG's resident workers' compensation underwriting expert, he'll be presenting information on cost containment during the webinar. If you have questions about this presentation or general insurance questions, Kevin's contact information has been included at the bottom of this page. Let's go back, and it will again be available at the end of the presentation. A little bit about our sponsor, Houston International Insurance Group, or HIIG, is an international insurance carrier that operates 4 wholly owned major insurance companies underwriting in more than 30 countries worldwide. For more information, visit HIIG's website at www.hiig.com or contact Kevin, who can specifically help you with heavy industrial insurance and risk management. Before we start the presentation, I just want to thank you again for attending. If you have a question during the presentation, please type them into the chat box or the question box on your screen, and we'll do a Q&A at the end of the presentation. Additionally, this is being recorded and can be accessed on the Maximum Capacity Media YouTube channel at youtube.com/maxcapmedia or Crane Rating Hotline's website, www.cranehotline.com. And now I'd like to pass the controls over to Kevin, and you can begin whenever you're ready.
Okay, thanks a lot, Katie. We'll jump right in and get started. Can you hear me all right? Hello.
You're all set.
Okay.
We can hear you.
Thanks, Katie. Well, we'll jump right in and get started as we have a lot of material to cover with you. Before we get into some of the technical elements, let's look at some overall accident statistics in the construction marketplace. According to the U.S. Department of Labor, the number of fatal construction accidents rose for the first time in 6 years by the end of 2012, their most recent data for this factor. The Labor Department's Bureau of Statistics found that the U.S. construction industry was the deadliest when compared with manufacturing and other industry segments. So as Katie introduced, besides the moral imperative for all contractors to maintain a safe work environment, work-related accidents and incidents will cause you more in future workers' comp insurance costs, especially when considering the new work comp experience mod factors over your next few policy years. Our resident workers' comp underwriting expert, Cooper Wallach, will speak now to some facets of the new experience mod formula. Coop?
Kevin, thank you very much. You're absolutely right. The National Council on Compensation Insurance is the company that sets the majority of the state's experience mods. And insurance companies like us will send in all of our experience data and all of our payroll data for all of our clients, and we're required by law to report all that. And what has happened over the last few years is the formula, which is a complex formula, broken down very simply, is focusing more effort on the severity of your claims, where there used to be a loss limitation of $2,500. In many states now, that's been quadrupled up to $10,000. So more of your larger claims are going into the calculation, and there's a heavier weight in the calculation for frequency. So many of the clients that have enjoyed credit experience mods over the years are seeing that those mods are moving closer to a 1.0 or even into the debit area when their actual loss history is very similar to what it has been in the past. And as more and more years of experience begin to add up in this new calculation formula, there's definitely going to be more of an emphasis on controlling cost and all those key issues, Kevin, that you've already hit on.
Okay. Well, that's great. Thanks. Thanks, Coop. Now, let's go to Section 2 on your slide, and we'll discuss some federal and state-specific regulations in workers' comp as some general background before we get into the specific cost containment elements. So, as you can see on the screen, first of all, it is mandatory federal law that all U.S. employers provide work comp benefits to any injured workers. There's no way around it. And that each of the individual states sets those benefit levels for injured workers in their respective states. So looking at the brief slide there, you can see the disparity in construction. It's a cost illustration, but a disparity in construction costs compared to other business segments. You'll note that the construction costs to be much higher, which is actually due to the work comp benefit levels set by these states in the construction trades, and that's according to the Center of Construction Research and Training. That 4.4 versus all other industries at 1.6 is a gaping differential. And what that means for the purpose of this conversation is accidents cost insurers a lot of money, which in turn costs contractors a lot more money than goods producing, manufacturing, services, and all other industries combined, thereby giving the incentive less injury costs equals less workers' comp expense to your organization. And it should be noted that the individual states actually determine the base rates that insurance companies like us at HIIG must charge the employers by industry segment, and it's based on these predetermined benefit levels. There is a couple of states that allow employers to opt out of traditional workers' comp in exchange for a workers' comp-like product. Cooper Wallach happens to be an expert in this and runs part of his division in this area. So, Coop, how about if you briefly describe how Texas handles the alternative to traditional work comp?
No problem, Kevin. What you have in the state of Texas is you buy comp or you don't buy comp. If you don't buy comp in the state of Texas, you have the ability to provide nothing to your employees, even though you're still obligated to take care of a workplace injury. In the state of Texas, you have the ability to buy an alternative program, and in that alternative program, it's called non-subscription. And even within that, there's a responsible non-subscription. And what responsible non-subscribers do, all of the administrative rules and regulation for workers' compensation are statutory. It's all law on what gets paid. All the comp policies are the same, and the claims administration is dictated by law also. When you move out of the work comp system, you lose all of those controls. So it's replaced with usually an ERISA plan, and all the benefits move from statutory to an ERISA plan, and you buy an occupational injury policy that will pay limited benefits, and there's a limited amount of time frame associated with it. Once you become a non-subscriber, you lose your common law defenses, and you're subject to getting sued under tort liability. And Kevin, I could go on for a very long time, but there is the non-subscription world is a world unto itself, and many people choose that as an option, but you're either in comp or you're not. And the comp benefits in most states are unlimited lifetime medical versus the limitations associated with those that move out of the comp system. And we can answer any questions on that after the fact, but it's an interesting and different world. But a lot of people that are required, like in the construction industry and in the trades industries, just simply aren't allowed to do that because of the certificate requirements for workers' comp.
Okay. Well, thanks, Coop. Now we'll go on to the next slide, and let's take a look at what we believe is the #1 element available to all crane and heavy construction companies that can contain costs. And really, we want to start off here by discussing if you were to establish a true incident and injury-free culture in your organization, I would believe that it would be hard to argue that that would definitely have a material factor in significantly reducing your work comp costs. And clearly, many people who know the hazard levels in heavy construction and crane industry segments likely would say, "Are you kidding me?" Or, you know, this is just way too oversimplified. Clearly, if you don't have any claims, your workers' comp costs will go down. They, in fact, will go down very significantly from a couple of different areas. And so it almost seems impractical. Well, it is not only possible to establish an incident injury-free environment in your workplace, it is real, and some of the most highly recognized major contractors in America, like Gilbane, Skanska, and even the Associated General Contractors of America, have provided testimony to its effectiveness. The IIF model was developed by a global consulting group called JMJ Associates from Austin, Texas, and they started about 12 years ago. Today it is gaining significant traction in the heavy construction environments all across America today. The incident injury-free model is pretty basic in an overview, but very complicated because it has multiple behavioral elements and on-site people testing and training to get an organization into a qualified IIF position. But basically, the IIF model shifts the focus from safety compliance to empowering the workforce to consistently identify hazards and to take immediate corrective action to avoid injuries, with one basic principle in mind: to ensure that every contractor employee goes home the way they came to work that day. And according to the AGC, which truly is one of the most foremost authorities, the IIF idea has gained significant momentum across the entire U.S. construction marketplace over the last few years. In particular, in the Boston area, where a group of construction managers, contractors, union representatives, government agencies, insurers, and other stakeholders formed what is called the New England Construction Safety Partnership. They established it back in 2005, and they engaged JMJ Associates to implement the IIF model in one of, arguably, the toughest construction environments in the world. And according to recent articles by the AGC, it has not only been well received, they are achieving their desired results. The point being, we're not selling IIF. I wish all our customers would subscribe to it. That's impractical. But the point being that low or no worker incidents and injuries over a 2 to 3 year period will dramatically reduce your work comp costs. So if we can take anything away from the written material out there in the success stories, focusing your efforts on worker well-being as the top priority over mandatory regulatory compliance can position your company towards an incident and injury-free culture in your own environment. And lastly, this IIF approach is designed beyond safety to cultivate stronger leadership skills through the changing of workers' attitudes, behavior, values, and this integral approach illustration on your screen has 4 domains which I'll briefly discuss. The right-hand quadrants represent the view from the outside of the corporate realm. The left side shows the IIF view from inside job sites. And if you take a look at the objective view, it looks at worker safety through observation and measurement, while the left side, the subjective view, focuses on reflection and constant worker interpretation of ongoing hazard identification and the corrective actions they step. So by moving from reactive to a creative action while embracing both subjective and objective views, construction workers can discover new safety approaches to the age-old problems that exist in high-hazard construction environments. So, as mentioned previously, the point is that some construction and crane companies have taken this more holistic approach, so to speak, versus the compliance approach to reduce incidents, which establishes the ultimate baseline for your ability to significantly contain your workers' comp costs, in addition to the better worker welfare. So now let's discuss another key element to contain your workers' comp, which is another sometimes questionable tactic: avoiding litigation in worker injuries. Clearly, one surefire element that will contain your work comp costs is to avoid litigation when injuries occur. And it is not only possible, it is a fact that the work comp system can and does work without injured workers retaining counsel. And the key element to position your company to be able to avoid litigation is pretty straightforward. First of all, unlike third-party liability cases that have to involve litigation and attorneys, the work comp delivery system is designed and mandated by state law to pay predetermined benefit levels to injured workers. In fact, the mandated state laws require payment of lost wages and all medical care, and if there is a serious injury, each state has an established benefit level for permanent partial disability or total disability results. So injured workers actually receive less funding from the disability side, less awards, because they get a lawyer involved when they don't have to in the first place, because the state has already determined what they will get. So there are 3 critical actions we see for contractors and crane company owners to take to ensure the work comp system delivery flows as it is designed to position your company to avoid litigation when accidents occur. 3 basic elements. First, training your supervisors. If you help the project foreman and supervisors establish a consistent and timely communication model to all injured workers with a focus on trust and job security and entitlement to the work comp care and weekly income benefits, is the right starting point. The second point is to create a series of education materials and possibly even helplines. By providing these materials and easily accessible communication through your insurance agent and carriers that answer workers' questions promptly to eliminate feelings of vulnerability and uncertainty. And we want to think about what happens when you have a worker sitting at home. Likely they're watching television and recuperating from their injury, and about every other commercial you'll see during the day is some attorney saying how much money they can get for the injured worker. The reality is, in most cases, the attorney's not going to get any more than what the state mandates the benefit level to be anyway. So, number 3, if you establish a disciplined and ongoing communication protocol with all injured workers, it should prevent misunderstandings through this clear and timely communication to your, not only to your injured worker, but to your agent and insurance carrier, to avoid delayed payment of benefits and medical bills, which is the typical driver to force an injured employee, to go seek counsel. So that's our piece on avoiding litigation. And the next key element for work comp cost containment is to recognize issues with the aging workforce. Okay, here in this slide, there is good news and bad news when considering some of the current construction workforce dynamics in relationship to your ability to contain your work comp costs with an aging workforce. The good news is that according to the National Council on Compensation Insurance, older and more experienced workers have significantly fewer work comp claims than newer and younger workers. However, on the other hand, the bad news is that the NCCI statistics reflect that our aging workforce typically sustains much higher severity with each claim when taking into account aging workforce, older people, limbs, joint injuries, arthritis, which is typical in worker injuries in construction, including a slower healing process and even higher maximum average weekly wages for the older worker. They've been on the job longer. So we got the good and bad news there. So the key element basically is to recognize that when an older worker gets injured, it is absolutely critical to establish trust and prompt communication with them to help contain their work comp injury, because first, it's the right thing to do, and secondly, the costs can get away when not properly managed. Okay, our next key element to consider to contain work comp costs is the rising prescription drug costs. In recent years, the use of narcotics in treating injured workers has faced heavy scrutiny, intense scrutiny, in fact, and for good reason. Recent data, again, from NCCI suggests that not only the drugs being prescribed, but how they are being fulfilled is of major concern. And both these factors contribute to escalating work comp costs, particularly considering the fact that medical expenditures in workers' comp claims are growing at a faster rate than the indemnity side of the equation, which is payment for lost wages in workers' compensation. So I'd like to ask Cooper to speak to the medical cost rising as a percentage of the overall work comp cost to give you some perspective in that regard.
Thank you, Kevin. Well, on the prior screen, I just want to emphasize one point, because you brought up the aging workforce is, I can't tell you how important that is from a good news, bad news story, but one of the things that's often left out, especially in the construction trades, is how critical having a personal health care plan can be, because we're seeing in the aging workforce many times untreated diabetes and blood pressure issues and different kinds of diseases of life that, while not related directly to the workplace injury, can have a significant impact on the ultimate net cost of that. So your point, Kevin, was absolutely wonderful on talking about the aging workforce. The expense for medical bill cost is going up dramatically, and specifically the use of opiates to treat pain control. The trend in the past has been to provide these narcotics, and they're not just mild painkillers. I mean, these are true opiates and extremely strong and are extremely addictive. And while the treatment for a short-term basis, it's very helpful for that immediate pain, it's not a long-term fix. And the medical industry continues to drive the cost up associated with primarily soft tissue-related injuries. The cost containment side of this on the medical side is controlled in many cases by the state, because kind of I'm just confirming what you said earlier, the state dictates how much will be paid for a particular claim, particular type of injury. But within that, if the states do not allow additional funding for that, what happens is more and more medical facilities will drop out and stop treating workers' comp cases, or there will be some abuse through overutilization. So cost containment, it comes at you from every angle. Overprescription of opiates, and it's very, very difficult to control. You have to be aware of it. Each of the individual policyholders has to be aware of where their clients are going, and that they establish relationships with those medical providers to understand that they want to get these workers back, and that communication has to happen before there's a claim.
Okay. Well, thanks, Coop. We've got a lot more material to cover with you guys. We want to jump right back in. When you're looking on your screen, you'll see a utilization issue and physician dispensing. Let's talk just briefly about that. We rely a lot, because as an insurer, we are dictated in a lot of what we do in workers' compensation by the NCCI. And the NCCI study, and I believe it's in the article that there's a website you can go to get these studies if you'd like. The study showed that utilization of prescription drugs as opposed to price increases were one of the driving forces behind the total per claim work comp prescription cost increases. And as Cooper mentioned, these opiates, these are brand name stuff that people who abuse drugs use. Several drugs such as Actic, Mobic, and the big one, Oxycontin, have shown significant changes in occupational injury treatment market share since 2003. This is right out of the NCCI study. And the study demonstrated that increased physician dispensing is associated with the increased drug cost per claim. And I guess we do have it right here. The NCCI studies are available on ncci.com. Pretty basic. So before any contractor or crane company can attempt to contain costs associated with the new drug elements, they should, in our opinion, first examine the rising trend of physicians dispensing their own drugs. When treating doctors dispense medicine, they oftentimes compound drugs, which is legal, leading to prescriptions that can be filled without the fee schedule, which is what Cooper was referring to earlier, where a state will mandate they won't pay more than X for some type of painkiller. When they treat and decide that they need a compounded drug of any of the ones mentioned, or any kind of drug, they can avoid the fee schedule, and it's happening in epidemic portions across the country. So it's leading to prescriptions to be filled without fee schedules, and on top of it they charge their own dispensing fee, leading further to increased costs. And according to the NCCI study, around $50 of a typical $265 prescription cost per claim is directly attributable to the physician dispensing. So all of this nearly 20% markup will be included in your experience modification formula, which, as Coop said earlier, will drive up your overall cost over the next 3 years. And the other troubling statistic is the increased cost of the narcotics that are being prescribed. The cost per claim for these narcotics jumped from $39 on average in 2011 to $60 on average in 2013. This represents a 90+% increase per prescription when there's really no basis for it. So when we recognize these new cost driver dynamics, it is imperative, we believe, for you to stay connected with injured workers to ensure prompt recovery. Clearly that's a very general statement, but if you can do whatever possible to get the workers back employed, even with modified duty, which we'll be discussing shortly, it should reduce the overall prescription use and the obvious increased cost factors to you, which you're paying for through your workers' comp experience mod. Okay, enough of the bad news. Let's look at some positive trends. If we go to the next slide. There has been a positive trend in reduced lost time injuries that clearly has a direct, a very significant direct cost in your ability to contain your workers' comp costs. Arguably, one of the largest cost factors that drive any workers' comp expense is the amount of lost wages involved in work-related injuries or illnesses. Even when an injured worker is still treated and may still be taking certain prescriptions, they can't, if they were in a modified duty return to work environment in your company, the payroll, which represents about half of the overall cost, comes off of your workers' compensation, and many contractors and crane companies understand the value of that proposition. So when this is an element that, when properly controlled, any construction and crane company can experience measurable cost containment. And it is not only possible, it's been trending favorably for U.S. employers over the past 20 years. The incidence of injuries or illnesses involving days away from work, as you can see on the little graph there, has declined steadily from 1992 through 2012. According to the U.S. Department of Labor statistics, illustrated on your screen, they've reduced this by over 33% just by nature of how businesses are operating. So if you take a concerted effort in your own employment environment to get people off of workers' compensation, you can make a significant cost containment impact accordingly. Now let's talk about the 900-pound gorilla in the corner. Return to work programs, and the question we hear regularly is modified duty, which allows for the return to work program to be effective, is it even practical? And we believe, Cooper and I and many of our colleagues here have been doing this for 30 years. We believe it's a legitimate question when it comes to this topic in this blue-collar, heavy construction crane industry scenario. And most frequently we hear, how or why does it make sense to pay an injured worker full wages and only get a partial of their normal productivity? And quite frankly, on the surface, we believe this type of question is practical and, in its purest sense, is a legitimate question. However, once there is a better understanding of the ongoing workers' compensation cost structure, it is equally pragmatic to see how return to work can be beneficial to both employer from a cost standpoint and the injured employee from a welfare standpoint, overall welfare standpoint. And I want to turn this over to Coop in a second, but I just want to touch on a few cost-centric points of reference for why return to work is practical when considering that every dollar of lost wage is included in the makeup of your company loss run history that forms the basis for next year and future year insurance costs. The other is that if an employer were to calculate the total cost of searching, hiring, training, a replacement for injured workers as an alternative to modified duty, you might take a look at the value of going the other route. And as Cooper mentioned earlier, the most recent changes in your experience modification formula by design include more lost wage costs. So every one of those dollars within the formula goes into your mod, and that will impact your company's work comp cost for 3 years beyond your current work comp policy term. Additionally, there are numerous success stories of contractors that have implemented efficient return to work programs and that have clearly reduced their costs. Basically, part of the short-term objective, for return to work is the immediate cost impact, and the longer-term objective in establishing return to work connects to the previous discussion about incident injury-free culture. That really it goes to an increased sense of risk management, and it benefits all stakeholders. So a couple of key items, and then I want to turn it over to Coop. That the most common long-term objective with return to work is reduced spending and helping the culture. And at the outset, the savings are difficult to quantify, but soon you can achieve material cost savings through the following, when you consider the following few points. There's a reduction in the cost of absence. There's a decrease in the cost of replacement workers. There's a decline in the medical claim costs. And going forward in the cultural aspect, there is early identification of possible questionable or fraudulent claims. By getting them back to work, there's a clear reduction in litigation expenses. And we believe there's an increased awareness in future injury prevention protocols upon your injured workers coming back. And lastly, there's an improved employee morale. So before we get into some discussion about what the International Risk Management Institute feels about return to work, I'd like Cooper to provide his perspective.
Thank you, Doug. There is a couple of key points, and Kevin, you've already hit on one of them, and that is the culture. While we know the construction industry is a tough industry, and you strive for no claims whatsoever, claims occur. If you wait to set up a return to work program until after a worker is severely injured or even moderate injury, you're already behind the 8 ball and you're late. After seeing thousands and thousands and thousands of claims over the years, the best controlled claims are those companies that have established the proper protocol for return to work up front. And the injured workers, not the injured workers, but all the workers within the organization know exactly what's going to happen even before they get injured. They're handed samples of job duties and responsibilities that they will come back to almost immediately that meet a wide range of return to work with limitation options provided by the physician. Some of the key components is having sample job descriptions of the return to work and having those posted for everybody to know that that's going to happen. If you're injured, you're coming back to work immediately, and we've got 12 different jobs set up and ready to go for you. We're also going to have physicians that understand our strong desire to get those employees back to work. The physicians need to be contacted before there's an injury. You need to have a designated facility ready to go, and the doctor that thinks like you think. If you can't find that facility, or the facility you have is not cooperating with you on return to work, find another facility. They're out there, and there's lots of physicians that believe strongly in return to work. Posting wall cards for specific networks to go to in those states that don't allow direction of employees. Working with the right employee, with the right physicians is key. And pre- and post-injury roles and responsibilities. having the employees held accountable for their injuries. Things happen. We completely understand that. But when they do happen, this is what we're going to do as a company to help bring you back and get you well and get you back into the marketplace. So you have to be prepared. You can't wait until after a claim. You can't say that this isn't going to happen to me, it only happens to the other guy. Injuries occur. You have to be prepared up front. And I believe you're going to find that Kevin has provided you with an excellent return to work document that's going to be going out to y'all to help support this. I would encourage you, take the time and be prepared now, because it's so critical to controlling your cost in all different areas.
Well, that's great. Thanks, Coop. All right, one last comment about return to work, and we wanted to get a quote from one of the foremost authorities, and it's from the International Risk Management Institute. And what they say about return to work is, once established, this is quote unquote, RTW, return to work processes represent a mutually beneficial solution for employees and employers. For injured employees, participating in an RTW program typically assists in their recoveries. Absent employees, on the other hand, depending on their circumstances, may become disengaged from the workplace. At times, physical ailments may transition to emotional deterioration, resulting in longer recovery time. The longer employees are absent, the less likely they are to return to their original jobs. So, and most all of us know who IRMI is, International Risk Management Institute. They actually run most of these very major heavy constructors self-insure their workers' compensation and some other insurance lines, and they do it through the International Risk Management Institute. And so they've gone from a captive self-insured construction group to the foremost authority, and they put out the best literature about cost containment and risk management for the construction trade. So I think their support of it is evident that it sure does make sense. And we hope this document you got, we sent it out. It's very simple. You can brand it yourself. We know that it would work, and we hope it could work for you. All right, so now let's go to the next slide, and we won't go through all this detail, but Coop's going to talk a little bit more about this. Certain states allow for the employer to choose the medical provider, and there's various illustrations of which states allow employer involvement and which states have a lesser degree of that or not at all. And you'll see that there's about 25 states that allow employee choice only. In these states, if any of you are operating in these states, it is imperative for you to consider some of these key elements we talked today to position your company to contain your workers' comp costs, because there are legal techniques, so to speak, that allow you to not be run over by abusive medical practice and the legal piece that tends to go with that. Coop, how about can you discuss how Texas itself handles the employer choice with that PPO equivalent models that might provide good reference to the people participating on this webinar?
Absolutely, Kevin. Currently in the state of Texas, there are two separate options. One is the employee selects, and the second one that the state has allowed for the last probably 6 or 7 years is where the employer opts in and buys coverage from a insurance company that has a in-network option. And when the employer buys that, they normally get a credit up front on the pricing, but they also have the equivalent of what we're used to using as a PPO network for our personal care. They have this in-network is the exact same thing from a workers' comp standpoint. So the employer has the ability to opt in to this network, in which case all of the employees have to participate in the network. They can choose their own position within this particular network. These networks have to be filed with the state, and they have to be approved. Some of the criteria associated with it is the physicians have to have a understanding of occupational injury and support certain practices such as return to work. So there's a lot of advantages of going to these networks, and Texas has seen probably anywhere from 8 to 11% savings between the out-of-network and in-network, and that's a huge advantage on a multi-billion-dollar market like we have here.
Okay. Well, good input, Coop. So, look, let's go into conclusion now, and then we'll take any questions that might be out there. So, in summary, our belief is work comp cost containment is definitely achievable by focusing your efforts beyond traditional insurance purchasing habits and getting more directly involved in the few elements covered in this two-part article series in today's discussion on the webinar. When we consider today's ever-changing construction environment, those contractor and crane companies that reaffirm your interest in these key elements to reduce work comp costs with your insurance agent and carriers will be a good starting point to position your company for sustainable work comp cost containment. So we discussed functional safety culture by getting beyond the focus on compliance to an incident injury-free method. We discussed establishing a dedicated communication system with injured workers to avoid litigation. We discussed briefly recognizing the aging workforce issues and the discussion about combating rising prescription costs through your own quote-unquote managed care approach. And lastly, if you work collaboratively with your staff to facilitate a work reintegration to reduce lost work days, if you were to do something in each of these 5 areas, you will be able to achieve measurable work comp cost containment. And we thank you for participating today and look forward to answering any questions.
Great. Thank you, guys. I appreciate you spending your time with us and giving us this great information. I do have a couple of questions for you. First, are the rising prescription drug costs, is that tied into the aging workforce at all, or does the age matter when you're talking about rising drug costs?
Very good question. I don't think so. We put a lot of research to put this together, put these brief bullets together. It seems more in the middle-aged to younger side because maybe it goes to societal issues, but the older workforce tends to not be prescription heavy from what I see. And the younger workforce can, very likely or possibly take advantage of it. So I think there is it's a good, fair question about aging workforce and rising prescriptions. But typically the workforce, the majority of good thinking workers would want to get off the prescriptions and come to work. But on the other hand, if you think about, our parents and grandparents and, some of the older crowd, it's a shame, but they almost have to be. There's so much prescription use today and so much TV advertising for more prescriptions. It would seem to go hand in hand.
Okay. Second question I have for you is, can you give some examples of modified duty when you're talking about the return to work programs? And does modified duty mean modified pay?
Very good question. I would like to defer a little bit of this to Coop on, but clearly not. from a pay standpoint, that we still have to keep in mind what the state mandated benefit levels are. So the clearly, if it's a partial work comp claim where there can be an offset, it has to stay within the pretext of the state mandated lost wage levels. And modified duty, we've seen some punitive stuff, and we've seen some more holistic stuff where typically in heavy equipment-based industries that we've seen, sample positions are to have them work in the maintenance areas for anywhere from the small end of cleaning to parts, inventory, and a lot of it depends on what their injury, work levels are allowed to by the treating physician. So there's a host of them, and I believe this document we provided can help you identify those. As you can imagine, every construction industry employer has different dynamics on what they do. So those that don't have big maintenance yards, then they have to do something else. It may be in the office, which can be a cumbersome issue, but typically it's still yard and maintenance that we've seen, and very often your incumbent insurance company and agents can help you design specifically. But Coop, do you have any input there on both the?
Every single worker that is returned to work on a limited, is going to be limited by the physician that they're working with. And they could be limited depending on the injury. The variations are exponential. They can be so wide. But let's say, for example, someone has a shoulder injury and can only lift 3 pounds. Then you're going to put them in a position where they can continue to work with the restrictions that the physician has given them. And like Kevin said, it's wide open on, you want injured workers to be visible to other injured workers. It is and you want to give them the maximum amount that they can handle to help them feel fulfilled during this. And it's a strain for them, because a lot of these folks, they don't want to be injured. I mean, they want to be a productive member. So maintaining that production and that feeling that they're still contributing to the company is very, very positive. But working within the restrictions that the physicians give could be anything from light office work to almost being a gate guard and monitoring the flow of machinery and equipment that comes into a job site. It could be taking pictures for quality control. It's really a wide variety, and you have to maintain your options and be flexible with it. There are even some options that if a light duty is not available, some carriers have the ability to offer work at different nonprofit organizations throughout the community. So you're only limited by your own imagination of how to get these workers back working within the restrictions that the physicians provide.
Great.
Thanks, Coop.
Well, thank you. Yeah. Anything else? Sorry, I cut you off, Kevin.
No, we're good.
You're good. Okay, great. I believe those are the only couple of questions I had today, but I've left our contact information up on the screen if you guys want to jot that down and you have something that comes up next week or next month. Feel free to contact Kevin or contact me, and we can take care of that for you. I want to say thank you again for Cooper Wallach and Kevin Cunningham today for their time and expertise. And we will get you those documents as well as the link to the recorded presentation sometime this afternoon.
Great. Thanks, Katie.
All right. Thank you. Have a good day. Thanks.
Thank you.